Hi everyone, welcome back to Be Rich. As promised yesterday, this is a follow-on video on going further of what I was trying to say yesterday before I got into what was happening in US and India and globally. I want to talk about ITC and the ITC demerger. ITC demerger has been in the news, and those of you who are thinking about investing in the stock for this demerger, should you be doing it or not, is what the question is. And what are the implications of investing as a value investor? What do you get? And why is ITC doing this demerger to start with? Well, the time is ticking on this demerger because the record date is very short. It's in January, first week. So if you are looking at ITC and you've never heard of ITC and you've been thinking about ITC and this seems to be the reason why you invest in ITC, it could be a good reason, because ITC is a stock or a company which is, I consider it value. My brother considers it a value. So I would highly recommend that you have a look at it regardless of the demerger. Now, what is with this demerger? ITC is a company which is famously known as the Indian Tobacco Company, originally by the British American Tobacco Company, BAT, and they listed in India and they operate separately as a company in India. And British American Tobacco still has large shareholding in ITC, and recently also they sold some of their positions in ITC and took all that money back home because British American Tobacco is a very sick company and their investors wanted some cash. That digresses. So what does ITC do? It does tobacco, one of the main sources of revenue. The other is they're doing FMCG products, which is fast moving consumer goods, such as, staples such as your Atta, Ashirvad. You would know about all this. And they of course are into paper also. And one of the other things they're into is hotels. ITC Hotels, very famous brand all over India. They've decided to separate the ITC hotels from the rest of this because of the simple reason: hotel industry requires heavy capital and it's low on margin compared to the rest of this. So by unlocking this, they're hoping it releases some value for investors of ITC and ITC Hotels. So they're the second largest player in India, ITC Hotels. They have 6 brands under them, subsidiary brands, and the new famous one called Story, another one called Mementos, which are boutique hotels, luxury hotels, which are under ITC. They currently have 13,000 rooms. They plan to scale that up to 18,000 rooms in the next 3 to 4 years. And 95% of the expansion plan is to be done through managed properties. Managed properties means they don't own the property. Someone else owns it, someone else builds it, and ITC helps them manage it and run it. And they do profit sharing, which makes sense because it's less expensive for ITC to do that. And it helps them expand faster and build the ITC brand, which is good news as a shareholder. So the other reason why you should think about ITC is once this becomes 2 companies, the value proposition becomes very different because ITC, the remaining part of the ITC, is basically tobacco and FMCG company with paper, and there the potential for it to grow and move forward at a breakneck velocity is much higher. So the earnings will improve and they'll be more focused on FMCG growth, and this is going to help the investor in capital appreciation. Now, the flip of it in the ITC hotels, what happens is this will also enable them to raise capital because there'll be a separate hotel, they'll have a separate management, and they'll be more focused on raising capital for their hotel requirements and room expansion and not be weighed down with all the other sectors being behind them and on their backs. This is a wonderful way for value to be unlocked for the investor. Now, when it gets into the core notion of buying it right now, the merger ratio, what they've proposed is 10:1. That means for every 10 shares of ITC which you hold, you'll get 1 share of ITC Hotels. Why is this? Some of you may be thinking, why aren't they giving 1-to-1? Well, the simple reason is 40% is still going to be held by ITC. 40% of ITC Hotels will be owned by ITC, the parent company. So by virtue of holding ITC itself, you'll be still invested in ITC Hotels. Let's say after the merger you buy ITC stock, you'll be owning 40% of ITC Hotels through the virtue of owning ITC. So the remaining 60% has to be divvied up between all the ITC shareholders. That is why the ratio is this way, where you get 1 share for every 10 shares of ITC. Now, if you have 49 shares of ITC today, I suggest you buy that 1 share and you round that number up to closest 10. So if you have 41, bring it up by 9 more and bring it to 50. If you have 38, buy 2 more and bring it to 40. Any multiple of 10 would be good because that way you will get that benefit of that 1 share. Another thing you must be very clearly keeping in your mind when it comes to this is As soon as the record date is set, as soon as the shares are allocated and it's floated, British American Tobacco has said it 1,100 times. They plan to get rid of their holdings in ITC hotels. They're not interested in it. They only want ITC tobacco. They don't want ITC hotels at all. So the minute the shares are traded, we are going to find British American Tobacco dumping ITC hotel shares. So be prepared for it mentally. When you do see the price being launched, you will see a huge correction. Maybe huge, maybe not so huge, I don't know. But there will be price movement in the share price of ITC hotels when it's listed, because British American Tobacco wants to get rid of it. And usually they'll do block deals or they'll dump it in the market. We'll have to wait and watch to see how they do it. So that will be there, and keep an eye on that. Now let's talk about value proposition as a long-term holder of ITC hotels. Let's say by virtue of being owner of ITC stocks, 50 stocks, you get 5 shares of ITC hotels. Should you immediately sell it like British American Tobacco? I will say no, do not sell it. Nor am I saying go and buy ITC hotels when British American Tobacco sells it. I will say just wait. Keep the shares of ITC hotels for the simple reason the second largest player in India. Like I said, they have sub-brands under them, and some of them are brand new, and they're planning to expand the number of hotel rooms they have by another factor of 5,000, right? And they're planning to do most of those as managed properties, which is good. That means the capital required for that is also lower. So they're going to get, earnings will improve, right? Because the margins are low. And ITC already, through a subsidiary of theirs called Russell Credit Limited, has holdings in Leela and Oberoi. They have a 8% holding in Leela and they have a 16% holding in Oberoi. And they've recently moved all that to ITC, and they've even expanded their holding in Leela and Oberoi by 0.53% and 2.44%. So Oberoi is right now, which owns Trident and Clark's. They own 16% of that, just traded in India as the East India Hotel, Oberoi, while Leela is traded in Indian stock market as Hotel Leela Ventures, and ITC owns 8% of that. So they are working on improving their product portfolio in ITC hotels, and they're also looking at acquiring strong positions in all their competitors in India. So it sets up a very interesting time to hold ITC hotels, is what I would argue. As a value investor, you should be looking at holding on ITC hotels. When it's allotted to you, you should definitely look on holding it. As far as expanding your holding and buying more ITC hotels, I'd say please wait. Don't rush into it. Just because BAT is dumping it, don't immediately think you're getting it cheap and buying it. We'll have to wait and watch a little bit to see what happens. And then always we can acquire it when it's needed and it makes sense in acquiring more stock as it goes forward. So this is my outlook on ITC. And if you don't have ITC in your portfolio and you've never bought ITC, should you be buying it because of all this news? No. I would say you should buy it because of all the other reasons why we've been saying it for a very long time. They're a very large FMCG company. Their paper is also a huge part of this. They do agrabatis also. Tobacco, yes, does constitute a lot of their earnings. But tobacco, like I said, worldwide is dying. And I told you the story of British American Tobacco, what's happening. So eventually tobacco will disappear. But one nice thing for people who are holding ITC stock will, by the time ITC will not be a tobacco company, though it will have the legacy of the Indian Tobacco Company name, there would be a much bigger consumer product company selling FMCG products in India. And you know how Hindustan Lever valuations are in India, you know Nestle valuations in India, you know Tata Consumer valuations in India. So ITC is one of the cheapest there, and they're a large brand and they have huge growth potential in India right now. Yes, in short term, like I said in the previous video, inflation and all that pain is there, high interest rate cycles are there, all that pain is there, but these are always temporal. When you're looking at holding a company for 15 years, these things come and go. If anything, they give you opportunities to buy these companies. So anyway, I hope that kind of gave you a clarity and some kind of sense on what to do with ITC and ITC demerger, and if you should be investing or not. Tomorrow I'll try and talk about another company, an American company. I'll probably be talking about Intel, I think, and it'll give you some clarity on what to do with Intel, with all the news and fervor around Intel. Should you be looking at Intel with all what's being said? Thanks for watching the video as always. I hope you enjoyed it. And if you did, please give me a thumbs up and like, and subscribe to the channel if you're new to this channel. And do share with friends and families, whomsoever you think would enjoy this kind of content. Other than that, nothing more. See you tomorrow with another one. Thank you for watching the video. Bye.
Hey guys, that my uncles Vinod Srinivasan, Anand Srinivasan and I have rolled out our Substack, which is basically a blog/newsletter where we're going to post our original research onto it, and we've analyzed macroeconomic trends. And a lot of you know my uncle Anand Srinivasan and I regularly write for The Hindu, and these articles are also going to be made available for you in the Substack. The link is moatinvesting.substack.com. You'll find it in the description and in the video right now. We hope you go check it out. We've put a lot of time and effort into it. And please give us comments and feedback on what you read. Thank you.